Okay, well, this is just a brief update at the beginning of the week. It's Sunday afternoon, my time, and the Tokyo Asian markets will be open in about 7 or 8 hours' time. So I thought it was an opportune moment to update on what's happening in the market. Now, you saw perhaps on my last updates in the Trading Clan and on the YouTube, not the YouTube, actually, on the Facebook private Facebook channel and so on, and emails and whatever, the summary from last week. And despite it being a very difficult week, and I think perhaps difficult's the wrong word, but a crazy sort of week in a way, we managed to produce a pretty good profit. But this coming week is going to be tricky again because we have the new non-farm payrolls coming out on Friday. That's the US jobs report. We have a war going on in Ukraine, and we have various other bits and pieces of news coming out. So we're probably going to have a slightly volatile week again next week unless things settle down quite a lot. But we've got a very interesting chart formation going on at the moment. Right now, the markets are closed because it is Sunday afternoon. Or during the night in Asian time zone. We're waiting for the Asian markets to open. So there's no movement on the chart whatsoever right now. But you can see we've moved all the way down. We had this big bounce. This was the beginning of the war. This moved down. The dollar strengthened. The euro weakened, which was to be expected if that sort of thing happens. And we've bounced up quite sharply from there, actually. And now we're moving up higher. What we have is we're approaching a very high congestion area, very densely populated area. And when I say that, I mean densely populated with resistance levels. We've got the 61.8% Fibonacci level over here, this sort of grey-brown area, the top of that area. We've got a resistance level in this green line, which I've drawn across, coming from over there, over here, and over here, so that's going to form a resistance level. We've got this downward purple line, which is simply a downward trend line, which is going to end up in a few hours' time in the same sort of price area. And you can't quite see it, but if I remove this trend line, or just move it away perhaps, you can see this red line here. That's the 200 period moving average, simple moving average, and that's also just above us at the same price. And we've got an overbought stochastic. So what we'll be looking for is for the price to move up to this sort of area here. All of these other lines will meet up at the same time and place, probably. The 200 period moving average, the downward trend line, the Fibonacci, the green horizontal resistance line, overbought stochastic, all of that will occur roughly at the same time and price. And if we put a little square block like I did in my last video, you'll see it's all within that sort of little block of time and space. And what will happen is we'll be waiting for a reaction in terms of candlestick patterns or price action to see if we get a reaction to those levels and a potential move down. The fact that we're below this red line, the 200 period moving average, means that we're still in a bearish market. So we'll be looking to sell predominantly, apart from a couple of the opportunities we've had to buy along the way. Those are sort of counter trend trades, which occur from time to time. There are opportunities to do that, but not with this trading approach. So we'll be looking to sell, and we're entering a very congested area, as I said earlier. And if we see the right sort of price action occurring simultaneously, there'll be some really good indications to sell. Now, we could be looking at this level here with the green line and the 61.8% Fibers, or we could be looking at this higher, slightly higher line at the 78.6% Fibonacci. But whatever it is, in this sort of green area here, where all of these things combine together, with a bit of price action to boot and an overbought stochastic, that's what we'll be looking for as an indication that there's a very good, high probability, low risk chance of selling. We'll be looking to place our stop losses 30 to 40 pips above where we enter the market if we do, which would be around about perhaps a 2, at the most a 2% risk. We don't want to risk more than 2% on any trade really. unless it's an exceptional opportunity. But we want to risk no more than 2%. So that could be a 2, maybe 3 or 4 to 1 leverage. And we'd be aiming for a move back down to the obvious support line, which is this previous low over here, where my mouse hand cursor pointy thing is. And that will be the obvious target, which would give us about a risk of about 30 or 40 pips, perhaps somewhere in that region. We'll have to wait and see what happens when the market opens. And a target down here, which would be around about 110 pips. So we'd have a 3 to 1 reward to risk ratio, which is perfect, and a low risk, very high probability trade, considering that all these indicators and lines and so on are converging at the same time and the same price. And that's what we want in high probability trading. So good luck for the week ahead. I might update very briefly when the market opens. It'll be around about 11 or 12 o'clock, close to midnight my time. So if I'm still around and still awake and watching what's going on, I'll try and let you know, perhaps by email or by a very brief update in the members area in the private Facebook room. And we'll see what happens. So good luck with all of that. I think it might be a good opening, as I said in a previous note to someone else, a good opening gambit or bet or trade or deal for the week might be a good place to start. And it might happen sooner rather than later if we get something aligned with what I've just outlined soon after the market opens in a few hours' time from now. So I'll speak to you again soon. Take care and very good luck with your trading again.